4 green anchors and 1 red, Warband. Ours is the red one. It is Friday, the 14th of August, 2026. Yesterday, the American stock market closed at the highest level in its history. The long bond finally turned green on our board, and Bitcoin walked the other way. Alone. Start with the anchor. As of 10 past 5 this morning, Eastern, Bitcoin trades at 62,800, down about 1.3% on the day. Its optimized trend has carried red on our board for 4 mornings running, and I will not soften that. Now, look at what surrounds it. The broad market, green. The Nasdaq, green. Gold, green. And as of 1:30 yesterday afternoon, the long bond flipped green as well. That is our read of the InvestAnswers Decision Support System, and it leaves Bitcoin standing as the only red anchor on the board. The regime reads risk on and pointed up, with stocks leading. The stock market closed at 7,799, a record, its first trip above 7,800. The Nasdaq closed near 26,800. Understand why the bond turned. At 8:30 yesterday morning, July producer prices landed flat, 0.0 month-over-month on final demand. That followed an inline consumer price print the day before. 2 cool inflation reads inside 2 days, and the market bought duration with both hands. Watch the timestamps, because they tell you it was 1 trade and not 4. At 1:30 yesterday afternoon, inside the same 30 minutes, the long bond flipped green, Nextera flipped green, Vistra flipped green, and Caterpillar flipped green. Utilities are bond proxies. That was not a power scarcity bid. That was a rate bid, expressed 4 different ways by the same money. Be clear-eyed about what that money is actually wagering on. This central bank is not arguing about cutting. It held in July on a split vote with 3 dissents pushing to hike, and the live September debate remains a coin flip between holding and hiking. That record high was set on relief that the tightening might stop, not on any promise of easing. So the whole board celebrated, except us. Now, the more interesting half of the story, and it fired on our own tape. At the 4 o'clock bell yesterday, 2 signals landed in the same minute. MicroStrategy's optimized trend flipped green. Coinbase's optimized trend flipped green. And both of them simultaneously printed mean reversion oversold. Trend turning up, price stretched down in the same instant. Those are the 2 largest publicly traded proxies for this asset. Their trends turned. The assets did not. Stack the flows beside that. Over the trailing week, ARK's largest additions included Coinbase, Circle, SpaceX, CoreWeave, and NVIDIA, its crypto and artificial intelligence infrastructure equity proxies. And on Wednesday, the spot Bitcoin funds bled $61 million net. Fidelity out 47, BlackRock out 14. The week's flows have been choppy and net negative. Read that carefully. Capital spent this week buying everything that rhymes with Bitcoin and selling Bitcoin. That is not a verdict on the thesis. It is a verdict on the plumbing. A melt-up to record highs is driven by mandates, indexes, and passive flows, and those things cannot buy a bearer asset. They buy a ticker. They need a custodian, a prospectus, an earnings call, a seat in an index, a line on a quarterly report. Bitcoin has no sponsor and no quarter to report. The equity that holds Bitcoin can be bought by a fund that is forbidden to hold Bitcoin. So it is. Still beats parchment. Understand precisely what you are choosing between. Every one of those wrappers is a claim on somebody. A share of an exchange, a share of a treasury company, a fund unit. Each one is a promise that an institution will honor a balance. They trade beautifully in a melt-up because they are exactly the shape the machinery wants. And in the 1 week when all of them are wanted, the coin itself is the thing being sold to buy them. The wrapper is somebody's word. The coin is not. That distinction costs you nothing in a green tape and everything in a red one. One honest note from the same tape before I move on. Solana's trend flipped green at that 4 o'clock bell and flipped straight back to red at 4 this morning. 12 hours, both directions. When a signal whipsaws that fast, it is telling you the trend is not there yet. I report the misses the same way I report the hits, now to a different board entirely. On Tuesday, Jordi Visser named the signal he actually watches, and it is not an American inflation print. It is the yen. His argument runs like this. Japan is defending its currency, and to fund that defense, rather than selling its enormous holdings of American government debt, it is pledging those holdings at the Federal Reserve to raise dollars, then spending those dollars to buy yen. That facility is real. Foreign central banks can post treasuries and borrow dollars against them instead of dumping them onto the market. Sit with the mechanism because it is elegant and ugly at once. The treasuries never hit the tape. Nobody ever sees a foreign seller. The bond market stays orderly, the headline stays calm, and dollars get created against collateral that never moved. Visser's read is that the intervention is the printing, conducted in the one way designed not to look like printing. He named Bitcoin as his preferred vehicle to capture the wave that follows. His timing is his forecast and not fact. He carries a falsifiable target near 200,000 by year-end, and I will hold him to that calendar. But the framing is worth more than the number. Yesterday, this market read a soft producer price print as proof the committee has matters under control. Visser is watching a different screen, the one where the control is the cost. 2 marks left, and the first comes out of Musk's other war camp. On Wednesday, his model house XAI shipped Grok 4.6, a new flagship, a context window of 500,000 tokens, and a real step up in agentic and coding work. Understand the difference that word carries. An agentic model is not one you chat with. It is one you point at a job and walk away from. Hold that against what sits under the same roof, a social network, a payments layer being built inside it, and now a model that can be handed a task and left alone with it. Here is my read, and I mark it as read and not announcement. A machine that can actually perform work will eventually need to pay for things. Compute, data, another machine's output. It cannot hold a checking account. It cannot pass a bank's identity check, and it does not care that the wire desk closes at 5. Software that transacts needs a settlement rail that never sleeps, never asks permission, and clears without a counterparty's blessing. There is exactly one of those. Every other rail on that list requires a human being with a legal name to vouch for the robot. Nobody announced that yesterday. Watch the direction anyway. One last mark, briefly. SpaceX gave back 3 to 4% yesterday, trading near $140. That reads like weakness. It is closer to the opposite. Since the first lockup expired on the 6th of August, the stock has run roughly 21%, and the short base collapsed from about 34% of the float to roughly 11 in a single week. Yesterday was not conviction selling. It was the short covering bid that drove the whole rally, finally running out of fuel. The overhang everyone braced for arrived, and the sellers it was supposed to produce never showed up. So carry this into the session, Warband. Nearly every line on the board is green this morning because 2 inflation prints let the market believe the tightening is finished. That belief sits 1 data point away from revision, and the September argument is still hold against hike. Meanwhile, the money bought the wrappers and sold the thing inside them. Know that trade for what it is. Not a judgment on scarcity, but a machine buying what it is permitted to buy. Every one of those positions requires somebody to honor it. Ours requires nobody. Let them own the paper that tracks it. We own the thing it tracks. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until the next dawn, sharpen the axes. Skål!